Hi everyone, this is episode number 12 of the East Auckland Properties Show, and today we are again with Brandon from RFI. Hi Brandon.
Hey, how you going?
Happy New Year.
Happy New Year.
So we're going to do our monthly market update, and we're going to start from the global markets. Was there any specific financial activity on the markets globally?
Globally, we haven't seen
during the holidays.
During the holidays,
yeah.
yeah. So while everyone's over Christmas enjoying the holiday break, we didn't really see too much going on. Usually, what happens globally at this point in time is we don't really see a whole lot of activity. People tied up with a lot of other things, so there's not really a whole lot to influence what's going on.
Yeah.
But what's been very interesting lately globally is cryptocurrency at the moment. So there's probably a big portion of people have heard of what it is, and a big portion of people who think it's a scam and everything like that. So there are a whole lot of mixed messages out there, and I'm not here to sort of, bring clarity on anything like that, but we've seen this new asset class. It's not so much, it's a currency that's behaving like an asset class. Mm-hmm. And it's very interesting stuff.
What do you mean by asset class?
So usually you'll buy something like a house, and the house might go up in value or anything. Mm-hmm. Currency fluctuates in value, but against other currencies.
Okay.
So what we're seeing with Bitcoin, Ethereum, and all these other cryptocurrencies that people are buying is that they're buying it for capital increase, which that isn't how a currency should really behave. If you're trading,
it's not a house. Right?
Yeah, it's not a house. So people, and it's very interesting because Bitcoin was designed to be a currency, and people have been buying it, and it kind of keeps increasing like it's an asset. And the day will come when people will realize it's a currency, and it doesn't necessarily matter how much Bitcoin you have. It's just that it's the medium to trade stuff through. So yeah, that's what we've seen. We've seen the rise of these other cryptocurrencies at the moment too, but it's turned into a really good way for people to raise funds and raise money, because there's not a lot of there are regulations that you have to jump through to do it properly, but there's not a whole lot of there's not a big barrier to actually getting the funding from somewhere else. So we're starting to see big initiatives be funded by cryptocurrency, which is amazing at the moment. So yeah.
Interesting.
Yeah.
And what's the overall situation on the local market at the beginning of 2018? We did our update, I think, late November last year.
Yeah, I think so. Yeah.
Yeah.
Well, look, what was happening in the local market back then, the rates had been really stable for the majority of last year, and the year before they were stable again. So if I was going to give a summary over the last 2 years, 2016 rates lower than 2017. 2016 rates were just as stable as 2017. Obviously 2017 a little bit more expensive, but we're seeing that again at the start of this year. But we're starting to see the banks really push for more lending as well. So the local market, these banks are actually wanting to lend, and they're being quite competitive. A couple of banks coming out with really aggressive TV advertisements, which is pretty good. They're looking for more business, and especially off the back of the LVR changes as well. Yeah.
So we have a little bit more relaxed LVR.
Yeah.
And it was introduced at the end of last year, right?
Yeah, and the start of this year. Yeah. So I'm happy to say that my first client, we've done a 35% existing house deposit. So that's really good. So
what's the change?
So the change is for existing investment properties, the LVR or the deposit requirement is no longer 40%, it's 35%. And then also for new home purchase, so for first home purchases, you can buy at 10%, so there is some leeway there. And banks have just put themselves in the market for 15 and 10% loans as well. So banks have actively come out to their advisors that they work with, their advisor groups like RFI, and they've said, hey, look, we're ready to go with 10 to 15. So that's really positive. It helps a lot of people into the first home, and but keep in mind that the new build investment properties are still 20% as a purchase, which is still good options. But you don't need as much anymore, which is good.
Okay.
Yeah.
What are the regulations around the foreign investors that want to buy in New Zealand?
So obviously they're tightening up the amount of foreign investors that can actually buy by putting a whole heap of obstacles in the way.
Yeah.
And that's on existing property, I believe. So it's new build property, and that's to help encourage the shortage that we've got in houses in the whole of the country. So yeah, for foreign buyers, those new builds, I believe, we'd have to confirm, and your own situation is going to be specific to you, so you'd have to get it checked before you go ahead and make a purchase. But yes, you'd need to have the existing properties in your line of sight if you're going to be investing and you're a foreign buyer.
Okay. Is there any? In November, we discussed the proposed government initiatives, but there wasn't enough clarity back then. Yeah. So is there more clarity now?
No. No, I think, but what we've got, the fundamental issue is we don't have enough houses, right? So we've got to have some plan in place to build the houses. So, and I don't know where it's going to come from. We've got a small kitty stashed away, $2 billion, right? That's going to apparently build 10,000 every year. Yeah. But it's the land that's locked up. It's the developers that aren't really coming, that aren't standing in the light right now. And then we've also got expensive building costs as well.
Why do you think they're not coming to the developers? Because it's financing?
Difficult. Yeah, it's difficult. So you've got for developer finance, you've got multiple partners who multiple things need to happen. It's like you're trying to cook the perfect stew, right? You've got all these ingredients that need to be put in, and it's got to be cooked at the right temperature. So you got the buyers that have to come in there. So you need a certain amount of pre-sales. You got to get the finance. The land price has got to make sense, and you've also got to get the building materials. But the builders want a lot for the building materials, and if they're going to produce it at scale, it's probably going to be a big company.
Yeah.
And then if you're not going to produce it at scale, and it's going to take a while, then it's going to cost you more money over time. And then with the price of land, if you're buying the land, everyone knows that land's expensive. So finding a good deal on the land on the way in is pretty difficult. And then you got to put your own capital up for risk too. That's the other thing. So to me...
So where does the government then come in? I mean...
That's the thing.
If the risk is only with the developers...
Yeah, you've got the $2 billion. I don't know how far you can stretch it, because you've got on the one side with the $2 billion, you've got, okay, how are we going to use this money to help out the developers? But how are we also going to help out the purchasers? Because some of the purchasers aren't quite there, right? Yeah. So, it'd be interesting to see maybe ballot figures. So the ballot is for, you understand what a ballot is? It's for first home buyers in affordable housing areas.
Yeah.
So if we look at developments, say North Point will be one.
Yeah.
In the stages, they'll release a ballot. So there might be 50 affordable homes, for example. You have to check the figures. So there's 50. It'd be interesting to see how many people enter the ballot, because that will give us a good understanding of what the demand is for affordable housing. I don't know if we have those figures or if they're public, but I think it'll be good to know so that we can, developers will see that there is that people are saying, hey, look, I've gotten it. Because the other thing too is that
with the market test.
Exactly. And those people who enter the ballots, some of the conditions are that they have to be approved for finance too. So you know that they're good buyers. They're not people just coming in and putting something on the table and saying, yeah. So, but look, this seems like a problem that cryptocurrency could solve. So, so it might be the perfect storm. Yeah.
Okay.
Yeah.
Okay. And is there an interesting case study that you can share with some of your existing or past clients?
Yep.
It's just trying to be more helpful for the people who are thinking about looking for financial advice or thinking about buying or selling.
Yeah, for sure. I think one example that I've got for clients that we helped out recently was a first home buyer, but it was also their parents as well. So quite often what I hear is this term guarantor. So guarantor is, I think it's a bit misunderstood, or it's understood only to 80% of what it actually means, and that little 20 that everyone either doesn't know or might turn a blind eye to is what makes a big difference.
Mm-hmm.
So we've got, in a guarantor situation, you've got first home buyer, and you've got the person buying their new home, their first home, and you've got the person, or you've got the family who's being the guarantor, the family member.
Mm-hmm.
Now in that instance, the guarantor needs to be entirely able.
Mum and dad,
need to be entirely responsible for the loan that their child or children or whoever they're helping out
mm-hmm.
is going to take. So at a time where the mum and dad are needing to also make sure they get to retirement and they make a couple more moves, maybe they still want to buy another property, maybe they've got to restructure their lending and they've got to sort a few things out. They put their children's needs ahead of theirs and it sort of encumber themselves and interlink their situation, which
mm-hmm.
it makes it very difficult for them to make moves further down the track.
Okay.
So obviously it's very good for the children. Right?
Yeah.
The children get a good deal. There are a few negatives though. So you're encumbering everything, but because you're not bringing a cash deposit or not a large enough cash deposit to the table, you end up getting a low equity premium on the loan anyway, and it's on the whole loan. So you're not paying, in some cases, an extra % on your whole mortgage just so that you can be this guarantor stuff.
Okay.
But the better option, in most situations, you have to get advice around it, could be to gift the money. So a gift is, instead of guaranteeing a full loan,
mm-hmm.
you draw out like an extra 50,000.
Yeah.
Right? And you pay your interest on it. You can maybe organise an interest-only loan for it, and you pay just interest on it, and you give it to your children, and that brings up their equity. So then they might have enough equity to not be charged that extra %. So they save money, and you're
mm-hmm.
not, you know, all interlinked in their scenario. So it's a much better situation, you know. So long story short, if you evict your children
mm-hmm.
with 50 grand, it might only cost you 2,500 at 5% interest, which is a pretty high interest rate. So it's $50 a week to kick your children out, and you can, and so and it's the reality of making sure that you have your situation checked over, because this is what these clients did. She was guarantored for, I think, a $550,000 purchase.
Mm-hmm.
But she was limited because in her application they couldn't consider other incomes that she had because she didn't have a large enough deposit. But by getting her parents, instead of guarantoring her and giving her the gift, she has enough of a deposit for those other income sources to be accredited
mm-hmm.
or used, so she can actually borrow more.
Mm-hmm.
So now the approval's somewhere between, I think it's going to be 650. I think we got it back this morning. So
okay. Is it legally easy to gift money?
Yes, it's much easier than guarantoring. Because
so what's the process? You need to get in contact first, of course, with the financial advisor.
Yeah.
And then with your solicitor.
Yeah.
And they will advise you how to do it as
exactly.
way.
So the premise of a gift is that money is a gift and that you are not expecting it to be returned. Because
mm-hmm.
if you're expecting it to be returned, then it's a loan.
Yeah.
So then in those instances, it sort of muddies the water a bit. So it's important for you to understand with the solicitor what the implications are. Is that, hey, look, if that money doesn't come back, that is fine. You're gifting it to your children.
Mm-hmm.
So that's something for you guys to consider if you're doing that. Solicitor, registered financial advisor or mortgage advisor, and then obviously a family dinner discussion about it.
Family dinner.
Yeah.
New Year's resolutions.
Yeah.
Because we'll have definitely a lot of those cases in our area, in the East Auckland area. A lot of properties are has very high market values, and probably many parents will try to help out their children get into the property ladder.
Yeah, for sure, and I think that it's the easiest way to do it. I mean, the price that you pay, again, if I come back to it, if you're paying $50 a week in interest, have your child move out, and now you don't need to pay, say, their insurances, their food, say if you wanted to get a homestay in, because if you're in this area, you're in the McLean zone,
Airbnb.
Airbnb, there are so many other avenues for you to, for it to work out in your favour.
Yeah.
And plus you don't have to do the laundry. So that's,
it's interesting that lately I've done appraisals on a lot of properties. People who are looking to downsize, sell their property and buy again in the area, but something small, single level, brick and tile, 2 bedrooms, easy to maintain, and then sell their properties
I've got a really good secret about downsizing a property, or when to downsize your properties. And a lot of people, like, they don't do it at the right time.
Yeah.
And the right time to downsize is 10 or 15 years before you're going to move into the property. Because if you're going to downsize, if you're going to sell your house and then downsize at the same time, then you've got to pay the market price for that property at that point in time.
Yeah.
So this is for anyone. I know there's a lot of people in our area who are 50 to 55 thinking about retiring maybe in 10 years time. They should actually take action and buy something now, because that property is going to increase in value. We've seen what happened over the last few years. Sure, it's not going to happen the same level over the next few years, but in another 10 or so, we're going to have seen the same property cycle. So it'd be better for you to take action now and actually buy that property first, while you've still got the income that you can show, so you can have a rental property. And then by the time you move in, you can renovate it, you can do it back up, you can have something really nice to live in.
I think that's a very good topic that we can cover in a dedicated separate video, just talking about downsizing, because this will be very helpful for a lot of people in East Auckland area and McLean Zone area.
For sure.
So probably we can do our next video before our next market update about downsizing, but just really good advice how to do it step by step. And cool. So if you need any financial advice, Brandon and the guys from RFI, I'll link their contact details below, so you can get in contact with them, even if you just have a question. And no question is stupid, so just give them a ring and talk to them. And thanks for watching, and see you next time. Hopefully next time we're going to talk about downsizing. I think that's a very good topic.
Cool.
Okay,
Awesome.
Cool. Thanks for watching.
See you guys.
Bye.